Alright guys, so welcome to today's video guys. So I'm going to be going over the Robinhood options challenge for week number 3. So I wasn't able to make a video on Friday because one of the contracts that I had for Tesla expired. I had a call credit spread on Tesla and expired, and it went to assignment. So it was assigned and one of the contracts got exercised, so that kind of messed up the numbers. So I wasn't able to get, so Robinhood kind of messed up the accurate numbers that I have on my portfolio, and it was saying that I was like up like $399, but that was not accurate. So I had to wait for the exercise and the assignment to go through on Monday. So I was able to get the accurate number on Sunday night actually, and the numbers went back to normal around like Sunday, like around like 11 o'clock, and the next morning everything went through. But on this video, I'm just going to walk you through all the trades that I took from last week, and also make updated videos about, you know, the competition that we're doing in this channel, and the penny stocks and things like that. So make sure you stay tuned guys, and let's go right into the video now. Alright guys, so last week I made some very interesting trades, and I traded SPY. Oh, before we go into the trades guys, make sure you like the video, comment, and subscribe. Any feedback. But let's go back to the video. So I placed a trade on Bank of America, SPY, Tilray, UPS, and of course Tesla. So Tesla made a huge move to the upside, so I made a few trades on it, and we're gonna see exactly what happened to it. But the first trade that I made on October 21st was on SPY, and I'm super bearish on it. I'm not sure why I get all that kind of bearish sentiment to SPY, but maybe I'm watching a lot of like YouTube videos. They're talking about recession, all that kind of stuff, and you know, I'm kind of very sentimental to the downside on the overall market. So you know, the first trade I took was bearish. Well, I got another call credit spread. I collected $11. You're gonna be able to, you guys will see exactly the strike price that I've gone into and things like that. I'm gonna be posting it every single time for every trade that I've taken in this portfolio. So, and I got a call credit spread, and the market was acting kind of pretty weird. So I decided to hedge my position and convert it to an iron condor. So I converted to an iron condor. I put credit spread, and I collected at $26 for that. So basically, it became an iron condor. And if the price stayed in between those strike prices that I've got in, I was going to, you know, collect at the maximum, you know, overall the premium that I've collected, which was 26 plus $11. And the second day, October 22, you know, I opened up a new position because news came out, Brexit and things like that. So the market sold off a lot. So it went to like 298. So I was able to capitalize on it. So my iron condor was it's kind of like an iron condor butterfly. It was super tight. That's what they call it, butterfly. I'm not sure the terms, but maybe I made a mistake about that, but I'm not sure. But I was able to create another order on the spy. I got in a put credit spread because it was selling off a lot. So instead I got into you know, a bullish sentiment on SPY. So I assumed that it sold off because of that news, and I thought it was going to bounce back. So I opened up a put credit spread. I collected $21 after that, and it is going to expire, of course, on Wednesday, which was October 23rd. And October 23rd came through, and I collected the iron condor. Since they're done manually, I'm able to close out, you know, either the call or the put spread that I've created, since these iron condors are created manually. So you have that privilege. That's the beauty of creating all the things manually. You're able to cut one of the legs off and let the other one ride. You know, if you are able to manage it, or if you are your computer or your phone, you have access to your phone to track the overall how the market is moving. So I was able to just call, you know, I just let the call ride, and then I closed the put credit spread. I bought it at 26, so I took a loss. So I sold it for 41, so I took a loss of like $15, and I let the call expire. So I collected the entire $11. So overall, I lost, you know, $4 off of the iron condor I created on Monday. And as I told you, I opened up October 22, a put credit spread. I was able to collect on Wednesday. Out of the $21, I collected $15. So overall in SPY, I made overall like $11 off of all those trades. And on Friday, October 25th, I got in I bought 2 contracts for $18, so I collected $18. I got a call and credit spread off of that. So now let's move on to the other trade that I've made. The other company that I made was on UPS. So when the stars are aligned, guys, I basically buy naked calls. It's really risky to buy them when your portfolio or your account size like super small. But I decided to buy, on UPS because UPS report earnings and it was a gap down a little bit. And, eventually it went to, the overall market was bouncing up very well. So I just got in, I bought a call, for $54. And within minutes, event the market was super bullish and UPS was not tanking. It did not do very well on earnings, but did not tank that much too, only down 3%. So it was able to kind of consolidate at the bottom and bounce back up. So I sold for like $109. The call that I bought $54, so I made like $55 off of that trade. So I made like more than 100% off of that trade on UPS on October 22, guys. So that was a very fantastic trade, but I rarely buy calls and puts unless I'm trying to hedge them or I'm trying to do something like this. If everything aligns in the stars, where the overall market is moving pretty well, all that kind of fun stuff. So the other trade I made was on Bank of America. So last week, if you missed the recap, I was super bearish on it. Gapped up, or the Warren Buffett news came out, all financials are doing very fantastic. So I was looking for a pullback. So I got on October 21st. I got in a call credit spread. I collected $18. I also hedged this position because it was very, very super bullish. The whole financial sector is super bullish. So I got on a pull. I also got in a pull credit spread for. I collected $7. So it's basically an iron condor that's created manually. So if things kind of does not work out, I can just cut one of the the spreads that I opened up and let the other one just expire to the end. So that's exactly what happened. On October 24th, I kind of sold because it was super bullish. So I took a loss on the call credit spread that I opened up for Bank of America. So I just sold it I bought it for 28. I collected 18, but it went up to 28. So I lost the difference, which is $10. But the call credit spread for, that I've gotten for the put credit spread, $7, I collected all of it. It expired. So the total loss was like $3. So that's what happened. Now, the huge, trade that I made was on Tesla. Tesla gapped up like huge 20% after it reported earnings on Wednesday. It went up like 20%. So right away, I wanted to, I got the interest to short it because it's probably going to pull back. It did pull back a little bit, and for like 1 hour or something like that, it went from like 320 to 309 or something like that. So, but I opened on October 24th a call credit spread. I collected $134, and eventually at that position was working super very well, as I mentioned, because Tesla was tanking for the first like 1 hour after market open. People were taking profits. I was looking for, my whole thesis was like, it's going to continue to go to the downside. Probably it's going to, max it can go to is going to consolidate. The next day I'll be able to collect all of the $134 that I got the premium off of, so that was my entire plan. This was on Thursday. But, eventually it started to grind back up to $299. So I decided to hedge it and I converted to an iron condor. So I opened up a put credit spread and I collected $89 for that. And the max loss of all of these things just expire. The max loss was going to be at $38. So I was able to minimize my loss significantly by hedging the position by opening up the put credit spread. So I was on the offense when I collected $134. It was working super very well. I almost collected like $70 when it was working super very well. So I was up super high. At one point, I was up like $230 my portfolio. So I was like, yes. And I was super happy about it. But it was my first time trading Tesla. So it was like a huge roller coaster at that time. So yeah, and the 89 did that went like that. So it was hedged. So the next day on Friday, my idea was, even no matter what happens, since I opened this iron condor manually, I had the privilege to cut one of the spreads that I've opened and let the other one work. So it was super bullish on Friday, so I tried to to cut the call credit spread that I opened up, but it wouldn't let me do it because Tesla was super high, it was moving super high, and my funds, I didn't have that much funds on the account, so also all of the collaterals were tied up on the Bank of America and the Tilray trade that I placed. I'm going to talk about it in a minute. So I wasn't able to let close the call credit spread and just let the put credit spread do the work and change this defensive iron condor that I created to an offensive move and make money off of it. So eventually it did not work out. It just eventually Tesla went on a tear. I was able to get filled on it and basically got exercised. I got a sign and exercise, let expire, and when that happens, all of my freaking numbers got messed up. So, but now let's move on to Tilray. Tilray on October 24th, I got in. Also, Tilray had a news, they send up some marijuana from Canada to the US for them to do research on cancer, breast cancer. So that was kind of interesting. The stock went up because of that news. So I opened up a call credit spread off of that, $23. My entry was super bad. So they continued to go up to $26 at that time. But I decided to open it when it was like at $25. So that was kind of messed up. So I had to hedge it really, really quickly because you don't want to mess around with Tilray. If it starts to go up, it starts to go up, So I opened up another, I bought a put, I bought a call, I think. I bought a call to hedge it. Since I had a call credit spread, it was kind of bearish position, so I opened up a bullish position to counteract that if it goes against me. And that it was moving very weird, so I converted the call into a put credit spread instead. And eventually I collected $58, when I converted, the naked call that I got into a put credit spread. And, the next day, it went exactly as I wanted it, but the hedged position that I had created was super bad, guys. So I actually ended up losing like $30 from the hedged position that I created, but I collected $23 from the call credit spread, and I collected $18 off of a call credit spread I've created. So overall, at the end, I eventually lost like $12 off of it. So that is exactly what happened in all the portfolio, and that's exactly what happened last week, guys. So this week, as I told you, I had one position that I continued from last week, which was I have a SPY call credit spread that is going to expire today as of recording of this video, and actually expired. So, but that's going to be updated next week. But now let's move on to the market watch, the competition that we're doing over there, the penny stocks are the positions that I have on all of them. As you can see, I'm still number 5th. I bumped up to number 4, but I went down to number 5th. But my portfolios, some of it was going up, some of it was not going very well, but I'm going to cut the positions that I have right now that is not working. I'm going to make another video of the top penny stocks for November. So I'm going to rearrange the portfolio, and I'm going to cut some of the positions that are not working, but some of them are doing good, some of them are not doing good. So I'm going to rebalance the portfolio and see what's going to happen for next month, guys. So be on the lookout for November stock market pick, top 5 or 3 penny stocks for November. So I thank you guys for watching, and I will catch you guys on next video. Make sure you like the video, dislike the video, comment below, let me know what you think, and I'll catch you guys next time.